This is Business Week Armenia, ＳիվիլNet's weekly economic digest. Here's what you need to know this week. Armenia has renewed its long-standing call for the Eurasian Economic Union, a regional trade bloc, to form an integrated gas, oil, and electricity market, a proposal that has been met with opposition from energy-rich members Russia and Kazakhstan. The most important factor in developing the EAEU is the issue of forming common energy markets, Deputy Prime Minister Kerobyan told EAEU representatives at a meeting this week in Belarus. He continued, "We hope for a constructive approach from our partners which would allow us to even out a number of existing differences. Forming a common market is the main goal." The EAEU was due to set up a common energy market next year, but officials have already indicated that timeline will not be kept. Vartanyan, a senior official at Armenia's infrastructure ministry, said in March he does not expect the EAEU to agree on a common energy market until at least 2027. Armenia has no reserves of oil or natural gas and remains highly dependent on fossil fuel imports for its energy. In other news from this week's EAEU meeting, Iran has formally submitted an application for observer status in the bloc, taking the country one step closer to full membership. Reacting to the development, Russian Deputy Prime Minister Alexei Overchuk told reporters he welcomed Iran's application and expects the country could receive observer status by the end of the year. While observer status itself provides Iran only with a seat at the table in EAEU meetings and access to some internal documents, it marks a key step toward full membership, which would allow free movement of goods, services, labor, and capital. That could have a wide-ranging economic impact on Armenia, the only EAEU country bordering Iran. Iran and the EAEU signed a landmark free trade agreement last year, eliminating customs duties on nearly 90% of goods. Prosecutors this week dropped charges against most of the suspects in a high-profile probe into alleged corruption involving Armenia's economy ministry and Synergy, one of the country's leading tech companies. A case that entrepreneurs have warned threatens Armenia's attractiveness to foreign investors. The charges stem from the alleged mishandling of a public tender that led in February to the detentions of then-Economy Minister Vahan Kerobyan and 4 of his subordinates, as well as Synergy CEO Ashot Hovanesian and 2 other company executives. Law enforcement claim the officials ensured Synergy won a $1 million tender by illegally disqualifying the other applicant, even though that firm submitted a much lower bid. The procurement bid was later invalidated in court, and Synergy did not receive any government funds as a result. As of this week, charges had been dropped against all suspects except Kerobyan, who remains under house arrest, and Hovanesian, who has been released on bail. Prosecutors have not indicated why they continue to face charges. Both Kerobyan and Hovanesian have proclaimed their innocence. For its part, the Union of Advanced Technology Enterprises, an organization representing more than 120 tech firms operating in Armenia, has warned the case harms the reputation of Armenia, which is beginning to be seen as a country that violates due process and a risky country for making investments and starting businesses. Armenia's burgeoning tech sector plays a key role in the country's economy, employing tens of thousands of people in relatively high-paying jobs, including many Russian expatriates. Armenia's reliance on remittances from Russia, historically the top destination for the country's labor migrants, is dropping sharply, central bank head Martin Galstyan said this week, as the war in Ukraine continues to upend traditional economic ties across the region. Personal remittances to Armenia last year amounted to roughly $1.7 billion, according to central bank data, representing about 7% of the country's gross domestic product. That is a far cry from the mid to late 2000s and early 2010s, when the ratio of remittances to GDP regularly approached 20%. The vast majority of those transfers came from Russia. Speaking with reporters, Galstyan pointed to declining business activity in Russia as the Kremlin shifts the country's economy to a full-fledged war footing, as well as to changes in international currency markets that mean salaries in Armenia are now much closer to those in Russia than they once were. Russia's ruble has fallen in value since its full-scale invasion of Ukraine in February 2022, while Armenia's dram has appreciated. International restrictions on money transfers to and from Russia, the world's most sanctioned country, also play a role. In March, almost all of Armenia's banks halted transactions made via Russia's Mir payment cards just weeks after the United States blacklisted the payment system's state-run operator. Before the war in Ukraine, tens of thousands of Armenians, almost all men, traveled to Russia every summer as seasonal labor migrants. Exact numbers are difficult to come by and estimates vary widely. Despite remittances' increasingly marginal role, Armenia's economy remains highly dependent on Russia, which continues to hold monopolies in or otherwise dominate key sectors including energy, mining, and transport. And as always, please follow CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.